Turn it up.
Get ready.
You're tuned in to VO Buzz Weekly.
The show where aspiring voice actors,
Established VO pros,
and curious fans alike get to meet and learn.
from the mega successful talent in voiceover, hear their personal stories, find out how they became so successful.
Learn their secrets and join them at the top.
Come on and get buzzed with us. We know that you have a dream. Go be all you wanna be. So come on and get buzzed with us.
And now, prepare to get seriously buzzed with your hosts, Chuck Duran and Stacey J. Aswad.
Hey, welcome to VO Buzz Weekly, and today we are going to take control of our finances. Wait a minute. We already have control of our finances. You are going to take control of your finances, right, Stacey?
Yes, we are sharing our amazing accountant with you, Diane McCalley. She's incredible, especially for creative professionals, people who are the CEO of their own company, which is probably most of you. So we're going to talk all about corporating, whether you should, whether you shouldn't. Can you deduct your rental space or your owner space, like for your home studio? All of it. We're going to give you the lowdown, and I'm excited.
Absolutely.
I'm really
She is
excited.
our secret weapon,
Yes.
and we're sharing her with you.
Here we go. Our guest is the owner of DC McCalley and Associates. She has over 25 years of experience as a bookkeeper and accountant. She is going to give great information to all of you out there who are the CEOs of your own company. She is our secret weapon, and we love her so much. And she is Diane McCalley. We are getting buzzed. Hi, Diane.
Hi. What's happening?
Oh, not a lot.
have
I'm
you.
excited to be here.
We are so excited to have you on our show today because, I mean, I have to say that you and I haven't been working that long together, right? Maybe a couple of years.
Yeah,
And you and Stacey have been
Yeah.
working together too. When I started working with Diane on my taxes and finances and bookkeeping and all this stuff, you guys are going to love it, love it, love it.
Yeah. No, everything would start with, well, Diane said. But what's great is that you are so creative. First of all, everything you do is by the book, legit.
Right.
You're not that creative accountant. For the creative professional, it was life-changing for me, for Chuck. So we want to share that with the good people out there.
Good.
Let's start first about incorporating.
Yes.
That's the big thing. Who should do it? If so, when? What kinds of corporations? It's not always right for some people. So can you kind of just go through what the different corporations are and when is a good time and who really needs to do it?
Okay. Well, first of all, what I'm going to say has to do with California tax primarily. Other states may have different rules. But in California, I look at someone who's consistently earning at least $10,000 in net profit a year as the make-break point of whether it's worth having a corporation.
$10,000 a year?
Net, after all your deductions.
After all deductions. Okay,
Yeah.
I was going to say, man, you need to get a job.
Exactly. Yeah. I mean, and some CPAs will put that bar higher, but I start talking to people at that level.
Right.
Now, in California, an S-Corp, I believe, is the best way to go because that's the starting point where you can start to control your own money and control how things look. So some of the benefits you get of an S-Corp is you become your own employee, but you get to say how much your pay is. You know, now there's certain guidelines that need to be followed, but you start to be able to have the ability to have more types of deductions. And they go through a small corporation a little easier, you know.
Than an individual.
Yes. Now there are.
What's the S in S-Corp? What does
It
that
means
mean?
small. It stands for small.
Small.
Right. Yeah.
Not super?
No, well, it's a super corp. Yeah. A regular corporation would be your big guys like IBM and, Xerox and AT&T that have lots of stockholders. A small corporation is for small, closely held businesses.
Okay.
Right. Now,
You don't have to have a board of directors and all of that.
nope, you
you
and
are
you.
the board of
You are everything.
Yes, yeah. The other thing is that some companies like to promote limited liability companies or LLCs.
LLCs.
Yeah. In California, LLC treatment is different, and it's a little less tax favorable. It's good for certain types of businesses, but when you're in basically a service-based business, I think the S-Corp is the best way to go, really.
Well, I love you have your rule of 6 Ps.
Yeah.
I love this. Prior planning prevents paying painful penalties. Say that 10 times fast. What do you mean by that?
Well, if you don't pay the government when they want you to pay them, then they start penalizing you. For instance, people get a tax extension in April for their personal income taxes. Well, what happens is you're getting permission to file your paperwork late, not pay late. File it late. So if you plan ahead of time and you have some idea of what your profit might be, you can make a payment along with your extension, or you can be prepared that if you owe some money, that you will have some penalties along with it.
Okay.
Yeah,
Okay.
yeah. So it's not an extension to pay your taxes, it's extension to file them.
I see.
See?
I didn't know that.
Yeah.
That's for all you procrastinators out there.
Light bulb moment number 1. So as far as, say, let's go back to, say you have an S-Corp. Is it that you need to do the quarterly taxes? Is that the best
Yeah, that
way
is
to avoid
recommended.
the big
yeah,
chunk?
yeah.
Why do you pay quarterly taxes?
Well, like when you're an employee and you have a paycheck and they take money out every time you get paid.
Right.
Right. So when you're either self-employed or have a corporation, the government wants some money coming their way.
Right.
So that's part of your planning. Is you take a look at it periodically. Quarterly is what they like, and decide what's your profit and should you send something, And this is a time when we would sit and go, how's business? Is it up from last year? Is it down from last year? Are you about the same? And if it's about the same, then you keep making quarterly payments based on
What you paid the year before.
Right. So the idea is if you pay quarterly, you won't have this big bill at the end that you owe.
Exactly, exactly. Because, for a lot of people it comes after the holidays, and now it's like, oh my gosh, I owe all this money.
Right.
And
Hold on, I have just one thing.
Okay.
So I don't forget. I'm so excited.
Okay, go ahead.
I said I have been so I love all of our guests, but I literally have been so
she has been very excited.
I'm so excited.
I must say.
It's my kind of math. I love it. How is it expensive to incorporate?
No, it's not.
Okay, because I think a lot of people think I can't afford to incorporate.
Yeah. Partly why I set my first goal for people before they incorporate is 10,000 net profit is because the costs associated with 10,000 is about what it will cost to run your corporation, right?
Okay.
So to actually incorporate, there's various companies out there that do it on the internet. I've got a price that I do for people, and it's usually a complete package price, and I do everything. I get you a little corporate binder with your official seal and
She does.
stock certificates. It's all great,
Yeah.
So,
Yeah.
but it's a one price, and I do it all.
Okay.
Kind of like what you guys would do when you're selling a package to a client.
Yep.
It's everything.
Okay.
Exactly.
Yeah.
She's all inclusive, like a great
Yeah.
resort.
Yeah.
All inclusive,
right.
man.
She's like the sandals of accounting.
Is there a like if somebody wanted to incorporate, just so that they know, is there like a price line of incorporating, like between this and that?
The actual cost of it.
The actual cost of
Yeah.
incorporating, of somebody becoming like an S-Corp or something like
Well,
that.
their services online, and they'll probably run you $500. If you go to a CPA or an attorney, you can
Right.
pay as much as $2,000.
Right.
So I'm
Okay.
kind of in.
So between $5 and $2,000 and something like that. So
Okay. But some things you're ending up having to do some of the work, so it may not be
Yeah.
as inclusive.
So that super low end it's gonna be like a menu where
Yeah.
everything's a la carte. Oh, okay, you want me to do this, that's extra. You want this
Right.
extra. You know, going to your attorney, you're going to pay the most.
Right.
You know.
Yeah.
Exactly.
So I'm a little more than the lowest price,
And a little less than the highest.
and considerably less than
Considerably.
Considerably.
considerably less.
Okay.
Yeah.
That's a
Yeah.
good place to take a break right
Yeah.
there. Considerably.
Yeah.
So since we're on this whole incorporation thing here, and listen, the reason why I'm really interested in this is because I was exactly where you guys are at right now, or a lot of you anyways, where I was running my business for years as doing business as Chuck Duran, and then I thought I was getting really, really fancy and smart and then I became an LLC, but it wasn't until I started seeing Diane that she showed me that I was throwing so much money away because I didn't have choices of where I was going to direct my money or how to direct my money. So, can you please tell us the big difference of what we get to do when we become something like an S-Corp?
Yeah. Well, what I try to explain to my clients is there's all these levels of taxation. You're an employee, you get taxed on your first dollar earned, right? Mm-hmm. So then you go, I'm going to work for myself, and you become a sole proprietor and you have a fictitious name, a DBA.
Yeah.
At that point, you get to take in your income and deduct your expenses before you get taxed. So you've got a better tax base with that. The third level is going into a corporation or an LLC. LLCs are great for certain things. They're great in the movie industry because you have lots of costs up front before you ever sell a product.
Right.
You know, but for people that are earning money, spending money day in and day out, particularly in California, an S-Corp is your better option because you, first of all, separate yourself from your business activity.
Right.
That provides you a little bit of protection from being sued, things like that.
Right.
And then you can more readily deduct things that are normal business expenses, studio rental, certain things that you have to spend to earn a living.
Right.
But in a corporation, they flow in there more naturally. As a sole proprietor, there's a little more scrutiny.
Right.
So you have those things. But I think one of the key things that I like to talk to people about with their S-Corps is how you can, instead of paying so much money into self-employment tax, which is your Social Security and Medicare, you can control that number, and with whatever savings you have there, you set up your own retirement plan that you get to direct. That's not going into the government. That even at my age, I don't know what I'm not going to get out of it what I put into it.
Yeah, exactly. And
So if you set up your retirement plan, first of all, they're deductible.
Yep.
Right.
Secondly, you get to say how the money is managed.
So you have things like a health savings account, you have an IRA, what are some options, what are some non-taxable ways that people can hold onto their money?
Well, like you said, a health savings account is a good way because, you put money aside. It goes into a savings account without being taxed. When you use it, it becomes taxable. But it's a good way for you to put money away for, those times that
Right.
might happen. But you've got a variety of retirement options that you can set up. An IRA is the simplest one and the one that most people are familiar with. But you've got self-directed IRAs, you've got pension plans, you've got 401ks, you have all sorts of things. And depending on your income levels, how many people you employ, things like that, will make a difference on what kind of plan you want to have. And these are questions that I would guide somebody to look at, but then they probably need to talk to a financial advisor.
Right.
To actually
Right.
get that going,
Right.
Yeah.
But then you get into the whole situation, you put money in and then your corporation can match, right? So then you can
Yeah.
end up getting
Yeah.
even more money.
Yeah. So essentially what you end up doing is you're paying money to yourself, but you can't use it
Right.
until retirement
Exactly.
age,
Right.
Which is good because that's
Right.
what we want to
Right,
be
yeah,
doing.
Right.
yeah. Yeah, because too many people, if they go into a small corporation and they keep their salary to themselves low, they wind up when they're close to retirement age going,
Where's
I don't
my
have any money.
Yeah.
You know, how come
Yeah.
I don't have any money? Well, because you didn't do that next step and set up some kind of your own retirement plan.
Exactly.
And retirement plans can be very creative.
Extremely creative.
Meaning you can get a truly self-directed retirement plan and they're only set up by a few kinds of firms that will do this, but a true self-directed retirement plan allows you to use your retirement money to invest in real estate, invest in other things, rather than just being tied into the stock market and bonds and things like that.
Exactly.
Right.
So, and I kind of like those ideas.
Yeah, those
Yeah.
are really cool.
Yeah.
Well, it's
yeah.
good to have things differently. So, managing the risk depending on what's happening, you know, because you can never tell from one day to the
Yeah.
next.
Yeah.
The
Yeah.
economy and
Yeah, and
Yeah.
then a year and a half ago, the stock market took a huge dump because of oil prices.
Yeah.
Right.
And we're just eking out of that.
Yeah. So let me ask you this. So how much should somebody pay themselves as a salary? What's appropriate? What's
Well, the IRS has guidelines. They have guidelines, and they want it to be a reasonable salary that you would pay anybody else to do that job.
okay.
And so we look at that, and we make, I work with my clients, and we make the evaluation as to, are you reinvesting a lot of your money back into your business because you're still kind of in an early growth stage? And in that case, many of us live hand to mouth when we're first starting our businesses.
Yeah.
So we look at really what's going on in your business, how much your income is, what might be reasonable. I'm not going to tell the president of IBM that he should only take a $60,000 salary. That would be kind of
Silly.
yeah.
Yeah.
Exactly. So we have to base it on, stay within the realm of reality with the IRS.
Okay.
But we make it so it's workable.
yeah. Okay. So this is something I always hear people ask about is allowances. You get that form and you're like, some people say, I have 10, I have 0, I have 2. What is the purpose of it? And is there a universal number, or what is the gauge for what you should be putting as your allowances?
Right. Well, if you're going to be working with certain studios like Disney and whatever, and you're going to have a bunch of W-2s, you should probably be talking to your tax person to figure out what that good number is. Because you could have 15 W-2s and 25 W-2s, and you're working 1 or 2 days, and they're not taking anything out, and at the end of the year, you're in trouble because you owe
You're
money.
gonna owe some money.
But basically the purpose of the allowances that you're going to declare on that W-4 form has to do with what kinds of deductions you take on your tax return anyway. Are you taking mortgage interest, property taxes, charitable donations, medical expenses? And if you have a lot of that, you can typically take more allowances. Right? If you don't have much, you're living in mom's basement or something. We have basements out here. But,
There's a ton of people out there that are living in their mother's basement. I can see you right now.
Yeah. Going, "Ugh." But if you don't really have anything to deduct, then you need to take less allowances.
Yeah.
Because you're going to get stuck at the end of the year. Now, that said, as long as you get your taxes paid by April 15th, if there's a penalty, it's pretty nominal,
Yeah.
Right. Right.
So, but these are good questions to work out with your tax professional.
That's cool.
Okay.
Yeah.
Good.
That's
good.
cool. And since most people in this industry work from home, what part of their home or elements of that home, whether it's internet, cable, phones, whatever, what percentage or what part can they use as a deductible expense on their taxes?
If they're still a self-employed individual,
Yeah.
the IRS is going to want you to measure your house. How big is it? 1,000 square feet, whatever. And then they want to know how much space is used exclusively for business.
I see.
So if you've got one whole bedroom set up and you've got it soundproofed and you've got all your studio equipment in there, you can take that bedroom. then they kind of want a square footage comparison. How big is that bedroom compared to the total square footage? Some people will go, well, I've got a 3-bedroom apartment. I'm going to take a third when I use one whole, and that's fine. And that's fairly reasonable because you also have clients coming in using the bathroom, using the kitchen. You're making coffee and sandwiches and things for them.
Nobody's ever made a sandwich for me in any studio. We're talking high class studios here.
I knew that you were going to say that. I could hear you going, I didn't get a sandwich. Chuck!
I'm just saying, I'm a little hungry and I didn't get a sandwich. Okay, go ahead.
Diane's never made us a sandwich, just saying. Anyway, back to you, Diane.
Yeah, so anyway, you can then deduct a portion of your rent. You could deduct a portion of your renter's insurance. You can deduct utilities. And, if you've got special feeds that you're paying for specifically for like a sound studio or whatever, those can be deductible. So, and these are things that as an employee you're not going to be able to deduct, or they will be far more restricted.
Right.
Once you get into like a corporation and you're doing that, then your corporation can actually sign an agreement with you as to how much rent they will pay you. Which is kind of a nice thing. And if you already own your equipment before you incorporate, the corporation can lease your equipment from you. And so these are things that then...
This is where it gets creative, and I love it.
If you just caught what she just said, you're going to save a lot of dough.
Yeah.
That's all I'm going to say.
Yeah.
Yeah, and we just put it on paper and, because what would the difference be if you rented a studio down the street, your corporation rents a studio down the street, or your corporation rents a studio from you.
Right.
From you.
So it doesn't matter if your home studio, your office, if you're a renter or you own the property. It's just about square footage and legitimate business happening in that
and money,
dwelling.
And money. What's costing you money or not costing you money.
Yeah.
I love that.
Yeah.
That was one of my favorite ones, by the way.
I know.
So cool. Hey, ask her another question. Go ahead.
So then as far as your gas, your car, your maintenance, all of those things, based on, the whole deductible thing, you can really, because there's a lot of people that are not deducting the water they buy, there's the apples they eat. I mean, is there kind of a general...
Does Diane know that we eat apples for declicking our sound?
Did you know that, Diane?
No.
That's why
if you have mouth noise,
Oh.
Yeah, a green apple will take out the mouth noise.
Oh,
generally.
Wow.
Yes. Yeah. Look, we taught you something, Diane.
Thank you.
She's like, I'll take that to the bank.
You're the only one with all the answers here. Well, that's all we got for part 1 with super accountant Diane McCalley. But guess what? Next week, we're going to be back with part 2. And all the stuff that you didn't learn in part 1, we'll have for you in part 2.
We will. And don't forget to keep up with us on Facebook, Twitter, and Instagram. And listen to us on iTunes, you guys. We love you so much. Thanks for watching. And just remember, you always have time for a little buzz.
Come on and get buzzed with us.
VO Buzz Weekly is sponsored by Chuck Duran's Demos That Rock. The voiceover demo producer to the stars is now available to you. Visit demosthatrock.com and take your voiceover career to the next level.
See you next time, and remember, you always have time for a little buzz.